This is the Resilient Advisor Show. My name is Jay Coulter, and today we're speaking with Matt Hougan, the Chief Investment Officer at Bitwise Asset Management. We're going to cover a wide range of topics, but specifically, these are for financial advisors who are looking at or investing in the cryptocurrency space. Matt Hougan needs little introduction in financial advisor circles. He's the co-founder of ETF.com and pivoted his career to focus on the cryptocurrency and digital asset management space. Matt, thanks for coming back on the show.
Thanks for having me. Delighted to be here, Jay.
I got to tell you, the episode we recorded last fall when I was starting this journey to learn about digital assets and their applications for financial advisors was one of our most downloaded and viewed shows. And it's because, Matt, you've been such a great advocate for advisors, learning how to put this into portfolios in a thoughtful way.
Thank you for saying that. There's an insatiable thirst from advisors to understand this. They understand that it's complex, risky, but also exciting. So it's great to hear that that show resonated with folks.
So today we're going to talk about Bitcoin. We'll talk about ETH. We're going to talk about the applications to it. But I want to start with a tweet that you put out yesterday because I found it fascinating as a context for this show. And I'm going to read it for podcast listeners. So this is from PayPal CEO Daniel Schulman. We all know the current financial system is antiquated, and we can envision a future where transactions are completed in seconds, not days. A future where transactions should be less expensive to complete, and a future that enables all people to be part of the digital economy, not just the affluent. Matt, the whole context of that quote really sets the stage for people who have that deeper understanding of digital assets and their long-term applications. What are your thoughts on what he had to say, and why did you post that?
It's such an amazing quote. It sums up why everyone who is serious about this space is interested about it. Look, the current financial system doesn't serve us particularly well, and some things about it are absurd, right? Stocks are still settling in 2 days. We saw the implication of that for retail investors with the GameStop fiasco. Banks are floating payments that belong to us and taking multiple days to process them. There's no reason that should exist in today's world. Right? The fastest way to get money to a foreign country today is to hop on a plane with a suitcase full of cash. We don't need to exist in that world. We can exist in a better digital financial future where money moves at the speed of the internet, where everyone can access the financial ecosystem from the ease of a cell phone without, localization or bias built in. That's the future that crypto, that blockchain, that decentralized finance is building to. And to hear the CEO of one of the largest payment processors in the world recognize that and talk about that as the future, it's just a milestone event. It shows how far we have come in the last 5 years when the CEOs of major corporations wouldn't get close to Bitcoin and crypto. People realize that it is at a tipping point of penetrating the mainstream. And that's why I put that quote out there.
So when I'm recording a show, an interview, I usually hear the line of the episode, and I think we just got it right here at the beginning. It's quicker to transfer money between countries by putting it in a suitcase and going from country to country.
It's insane. It boggles the mind. People don't recognize, they accept that this is reality, but it doesn't have to be the case. That's literally true. It takes 2 days to wire money for using Bank of America to London. How insane is that in a day where I could open up my phone and watch any movie that's ever been created or read any book that's ever been created or have a free video chat with my friend in Kuala Lumpur? And it takes 2 days to send $5,000 to London. It's absurd. It's ridiculous. It won't be the case in 5 years. And blockchain and crypto is what's going to solve that.
I love it. And people are watching this all over the world, but it takes 2 or 3 days to send them money. You're spot on. So last month, I had Tyrone Ross, the CEO of OnRamp Capital, on it, and I posed this question to him. What should financial advisors do if they're thinking about allocating to the crypto space? And Matt, I want to play his answer for you.
Nothing. Learn. Educate yourself. Continue to read. And again, I want to make this very clear. I actually have a lot of folks who are financial advisors or folks who are in the space that kind of disagree with me on this. I think most financial advisors shouldn't be doing anything. They should be learning. You shouldn't be looking to allocate. You shouldn't be looking to do any of that. You should be learning right.
What's your take on his response? Because it's not normally what I get.
Well, I would say, first of all, the first thing they should do is talk to their clients about whether they're allocating today, because there is real risk of clients allocating on their own from a security perspective and from a behavioral perspective. Remember, this is a very exciting asset class, but it's also extremely volatile. Retail clients are going to be better served if their advisors are guiding them through allocating to the crypto markets. And I think what advisors would find is if they ask their clients, many of them have Coinbase accounts. Many of them are buying Bitcoin, Ethereum, or other coins further down the spectrum on their own. That's what we learned in our financial advisors survey. About a third of all advisors think their clients are allocating. Another third don't know. That's 2/3 of your clients who may be allocating. So the first thing is see if you can bring that in-house, because you're going to do a better job with it than clients are on their own because of the behavioral and the security factors. And the other thing Tyrone's absolutely right about, you have to learn. You have to understand. You can't get overexcited. You have to understand that there are risks and benefits, that allocations have to be sized appropriately. For some advisors, it'll make sense to allocate today. For others, they should wait. But learning is important, but also talking to your clients, because a lot of them are doing it on their own, and that may be a recipe for disaster.
And I want to make sure advisors are aware of two great resources out there. First is the CFA Guide to Crypto Assets, which you and your partner put out. Could you tell viewers a little bit about this white paper?
Sure. Yeah, it's 64 pages. It's available for free from the CFA Research Institute. It's a complete guide to Bitcoin, blockchain, and crypto. So if you have fundamental questions like what is the difference between Bitcoin and blockchain, which is more exciting? What valuation strategies are there for evaluating different cryptocurrencies? What's the regulatory perspective? And you want it not from, maybe an overhyped crypto Twitter sphere perspective, but from what attempts to be, a cautiously optimistic investment professional perspective. I think it's a pretty good introduction, and it's, as I said, available for free. So that's what we are trying to achieve: give people a place to start this learning journey that Tyrone was talking about.
Yeah, I found it to be a serious take written in the language that financial advisors can understand. And that's what makes it really effective for the advisor community. Another resource out there, Adam Blumberg and the folks at Interaxis, they've created a certified digital asset advisor certification. So if you're interested in going deeper, becoming certified, visit certifieddigital.org. That's certifieddigital.org. They've been doing great work advocating for financial advisors and their understanding in the crypto space.
They do amazing work, and they also make it very simple. I really admire how they take very complex topics and make them easy for people to understand. I get a lot out of viewing their content. So I agree with that recommendation too, Jay.
Awesome. So you guys, in prepping for this interview, I ran across something that I had not seen and I wish I had. You guys put together a benchmark survey in conjunction with ETF Trends on advisors' attitudes towards the crypto space. What did you guys find?
Yeah, it's really interesting. This is the third year that we've been doing this survey with ETF Trends. They go out and ask financial advisors of all stripes what they think about crypto. This year we had almost 1,000 people respond to it. I would say, a few highlights. One, adoption is increasing. So last year when we did the survey, 6% of advisors had allocations to crypto in client accounts. This year, 9%. It's still early. It's still a minority of the people surveyed, but that's a meaningful number. That's about 100 advisors who said they're allocating to crypto directly in client accounts. But here's the other interesting fact. Last year, about an additional 7% said they plan to allocate in the next 12 months. This year, on top of the 9% that are allocating, 17% said they plan to allocate in the next 9 months. And a further something like 30% said they were unsure or evaluating it. I think it's important because this is happening right now, right? Crypto is jumping the chasm from the early adopter market potentially to the mainstream market. You see that when BlackRock opens its funds to invest in Bitcoin. You see that when Guggenheim's CIO is investing in Bitcoin. You see it when MicroStrategy is buying it on their balance sheet. And you're seeing it in the advisor surveys we're putting out. It's going from a very few advisors to a significantly larger number of advisors, and it's happening as we speak.
Yeah, those numbers are actually surprising to me because the folks that are reaching out to me are the advisors that are reaching out to me aren't already allocated to it. They're trying to figure out how. In your experience, and I'm kind of going off the cuff here, how are these folks doing it? Are they part of the Fidelity ecosphere where they have access to it? Or are they setting up arrangements where they're doing it away from their custodian and their normal standard operating procedure?
Yeah, I can talk to you about it from Bitwise's perspective. Bitwise is fairly unique in the crypto ecosystem in that we were created explicitly to serve the financial advisor market. That's obviously the market I came from in building ETF.com and Inside ETFs. It's the market where our distribution team comes from. They all come out of places like iShares, Deutsche Bank, Global X, Index IQ. So we're built to serve those groups. It really comes down to two primary ways. One, a lot of those advisors are interacting with private placement funds that aren't available with their custodians. So Bitwise has some of those private placement funds. And then the other place they're allocating is through OTC traded trusts, whether that's BITW, the ticker for the Bitwise 10 crypto index fund, or GBTC or ETH, which are grayscale products that provide exposure to Bitcoin and Ethereum. The great thing about those products, you can buy them in traditional brokerage accounts. You can buy them in TD Ameritrade. They'll fit into advisor workflows. The downside of those, which I'm sure we'll talk about, is they can trade at premiums and discounts. The reality of the situation is we're all waiting for that day when we have a Bitcoin ETF or a crypto ETF that's WYSIWYG. What you see is what you get and is easy for everyone to buy. At this point, we're not there yet. Every approach has its pros and cons. And so advisors are deciding, is it better just to wait? Is it better to have a paperwork burden and use private placements that allow access at NAV? Or is it better to buy these OTC traded trusts that trade at potentially volatile premiums and discounts? And it's just a matter of which is right for which client.
So I want to go deep on BITW and contrast it with GBTC. But first, let's go back to the ETF concept.
Mm-hmm.
I, in my limited understanding of the space, hear that there's some challenges around creating an ETF for Bitcoin. For the novice like myself, what are those challenges? How is there not one already in the marketplace?
People have been trying for a while. I think the first ETF application came in 2013 from the Winklevoss twins. The reality is in 2013, there were lots of reasons why we shouldn't have had a Bitcoin ETF. There wasn't regulated custodians. The market wasn't well arbitraged. It wasn't very liquid. There was no history of audit in the space. We didn't know what all the risk disclosures were. It was a very early market. So it's not surprising that those early applications were rejected. As we've progressed over the last 8 years, some of those problems have been mitigated. There are now well-established custodians in the crypto space, people like Fidelity, people like Coinbase Custody that are managing or custodying billions of dollars of assets for institutional investors. Audit is fairly well established. The primary hurdle that remains is the SEC's concern about market manipulation in the Bitcoin markets and the ability to surveil that. Now, no market is free of all forms of manipulation. We just saw that in GameStop. But you need to be able to surveil that. And so a number of issuers, including Bitwise, including VanEck, are working with the SEC to try to get over their hurdle. I think the important thing to understand, and you know this from the ETF industry, new breakthrough products often take many years, right? The first bond ETF took many years. The first gold ETF took many years. The first levered ETF took 8 years. The first non-transparent active ETF took 10 years. And the reason they take that time period is the SEC is focused on investor protection. So in Bitcoin, they've been asking very good questions. We're getting closer. I personally think we'll get there, but we're not there yet. And it'll likely be, a year, 2 years, 3 years before we get there still. But I do think we'll get there eventually.
Excellent. Let's pivot to BITW. For the novice that's just hearing about this as an investment opportunity, what exactly is BITW?
Sure. So Bitwise is well known for having created and today running the world's largest crypto index fund, which is the Bitwise 10 crypto index fund. It holds the 10 largest crypto assets weighted by market cap. So you can think of it akin to the S&P 500 of crypto. It has a large position in Bitcoin. It has a significant position in Ethereum, and it has positions in other assets like Chainlink and Uniswap and Aave that are more experimental and very exciting and very risky. But we developed an index strategy because a lot of people want to make the bet we were talking about in that PayPal quote, that crypto, Bitcoin, blockchain is a major advance, and it's going to have significant impacts over the next 5 to 10 years. And rather than picking one coin and trying to decide which is best, just own the market, right? The core thesis of ETFs. So Bitwise and BITW is the largest such index fund. Now, the shares BITW, what those are OTC traded shares of the private placement fund. You can buy them in a traditional brokerage account. The important thing to realize, as we discussed, is they can trade at significant premiums and potentially discounts to the net asset value. We disclose that on our homepage. If you go to bitwiseinvestments.com, at the very top of the page, we show you the estimated NAV and the market price. We want everyone who is considering investing to understand those things, but it does give another access point that's not limited to accredited investors and that's available through traditional brokerage accounts. So that's what it is. That's what exists. And those are some of the pros and cons.
Yeah. So the premium and discounts that it has the potential to trade out, they seem like a traditional closed-end fund. So I imagine would the same type of analysis for a financial advisor need to be in place as if they were looking at a closed-end fund, or how do they approach that?
Yeah, it's very similar. It has more. It's more in common with a closed-end fund than it is with an ETF. We have a nice paper on our resources section of our website at bitwiseinvestments.com that walks through why these premiums and discounts exist, but evaluating it like a closed-end fund in the understanding that you have to consider both the core of the investment thesis, right? The exposure that the index is trying to track to the top 10 crypto assets. And then you have to understand this premium and discount issue the same way you do with a closed-end fund is a good starting point for that analysis. I like that analogy quite a bit, Jay.
Yeah, I'm pretty sure I stole it from you somewhere from some media appearance that you had. In fact, since you haven't said it yet, I would like listeners to know that this index they put out is like the S&P 500 in the Bitcoin space. And I like that reference because that's easy for the advisors to understand. You're getting broad exposure and not necessarily concentration on one particular coin.
That's right.
So if an advisor is building a portfolio and they decide that a 1 or 2% allocation, maybe it's an alternative asset class for them, makes sense, and they're trying to decide between your product and GBTC, what are some of the considerations for them to think through?
Sure. I mean, our product, the two primary differences, GBTC is much larger. It's therefore more liquid, and it provides exposure directly only to Bitcoin. It'll obviously have different premium and discount characteristics. Our fund is newer, it's smaller, but it provides exposure to all 10 assets. The important thing to understand about the crypto asset market is it's like any software market. So just like Microsoft exists and Salesforce exists, and they're both software companies, but they're doing different things and they're both exciting, exceptional companies. In the crypto asset space, Bitcoin exists and Ethereum exists. They're both interesting projects. They're actually trying to do two very different things. They're all in the category of, what happens when you move money and digital property rights onto the internet into a native fashion. They're all playing in that space of the future of finance in the same way that Microsoft and Salesforce are playing in the software technology space. But some people want to make a broader bet on this theme that I talk about, that the PayPal CEO is talking about. And some people want to make a very narrow bet just on Bitcoin. Maybe those people are most concerned about inflation and looking for a hedge. That's often when people turn towards Bitcoin. People who look for a broader exposure either don't want to have that explicit opinion, or they're also excited about some of the really phenomenal work going on in the decentralized finance space and the programmable money space, which is really taking place on those other assets. I like it, Jay, because in any disruptive technology, it's hard to pick the winners and losers, right? My family had a Betamax. I had an AOL account. So maybe my track record of picking the winner isn't so great. But this broad-based exposure, I've just, for me, I'm trying to express a view that I think this blockchain, Bitcoin, crypto space is going to be bigger in the future than it is today. And if you want to express that view, why not take an index-based approach to it?
We were a Betamax family ourselves, and I had an AOL account. So yes, diversification is the key, even if you're in the industry.
That's right. I love it.
we're coming up on our 20 minutes. I got to ask you about something that is really hard to not talk about, and that is Dogecoin and Elon Musk. I don't even know what your thoughts are. I couldn't find it anywhere on the internet. But while you're giving us your thoughts, I'm going to throw up some of the memes that I found prior to the show for our live viewers. What is it, and why is there this mania around it now?
Yeah, it's so funny. I mean, Dogecoin was created sort of as a joke, pointing to the excesses of the crypto market. It's based on that dog, which you're showing there. It's not a serious coin. It's not a coin where there's significant development activity. It's not trying to solve major societal problems. It's sort of like a joke. Now, the issue with it is its existence, and the fact that Elon Musk is talking about it sort of colors people's opinions about crypto. In the same way, if you back up to the late 1990s, the excesses of the internet boom colored people's opinion about the importance of what was going on there, right? Or movies about Facebook colored people's opinions about the importance of what was going on in social networking. So we all laugh at those things. If you're going to invest in Dogecoin, you should understand it's meme driven and not taken seriously by most of the crypto industry. But for advisors, I think it's important not to let that shade their view of what's going on in the rest of the market. Anytime you have a major disruptive new technology, you get these speculative excesses, you get these bubbles on top of it. And we've seen that in crypto because it's been the best performing investment in the world in 8 of the last 10 years. So you get these flares. And as an investor, you need a way to separate, the serious applications from those flares. And in one way you can do that is just by ignoring Dogecoin.
Matt, I really appreciate you coming on the show. You're a wealth of information, and thank you for being such a strong advocate for financial advisors in this space.
Thanks for having me on. I'd love to do it again sometime.